Okay, traders. Now, welcome to what to focus on this week. Now, the key part of this is basically just keeping you in tune, quite simply with what's really going on. Let me just take off the video control so I don't ruin something. Yeah. So this is the key part to it. Now, the starting point for your week, right, would be you come back and have a look at what's going on here across the pages and the instruments. And I would my first port of call is always having a look at what happened Friday, especially if there was a big release like the non-farm payrolls. We did have some big sort of numbers there. If I just get the right one up. Okay, so well, as far as the numbers came out, they came out weaker than expected, right? So if I just come back to previous week, get that up. And this is, and I've got to say, right now at the moment, market conditions can change, but the sentiment around the central banks is flipping on a dime, right? There's, you see strong US numbers. They're like, yep, we're factoring out rate cuts for the next 3 months. As soon as we get a weak number, they're back on, right? Which is it's not usually on such a knife edge, but it is at the moment. And the non-farm payrolls have definitely given us food for thought as far as what's going on in the US economy. So 175K, they were expecting 243. The consensus was for a 3.8 unemployment. We got 3.9. So two components there, weaker. And then you throw in the average hourly earnings. It's the first time we've seen the unemployment figures roll over, right? And that is a key part to understanding what's going on. Right, so let me just get that punter in. So just looking at this on the frame of it, right? So that sets us up for this week. Now, if I come into this week's trading, this is where it's actually a pretty good week, because what we have is a situation where we don't have much US numbers, right? So it gives the other currencies and other instruments a chance to shine, right? And really the direction will come from this week, various other components, right? Like the RBA, we've got the RBA, we've got the Bank of England also. I think that's on Thursday. If I just get that pen down, scroll down there. Yeah, you got the Bank of England there on Thursday. You got some UK GDP numbers also on Thursday. So basically, when I look at the week, okay, I like to sort of see what happened with what's going on in the various instruments. And we can see here, just on the hourly charts, right, a bit of a dollar clean out. Now, and you see this across the board. I mean, dollar CAD did ricochet. Then you've got euro, sterling, Aussie, Kiwi all going up. Now, this is like showtime. Not only have we got dollar yen coming in, and the BOJ sort of have done a good job holding it down, they've just got to really confirm this week that they mean business and get it probably under 150, and then that may turn the tide on dollar yen, or it will keep people away from it, which is what they want. So you've got these various things looking to break down. Now, start of the week, I'm looking for that short-term momentum, but one of the key things is I'm looking for, okay, what's happening on the overall trends here? Is there a shift in the trends? And there are a couple of close ones. Now, since 2015, when the Swiss hit was a massive debacle, I've sort of stayed away from it, but it has been a great source to tell us when the dollar trends are sort of kicking in or when they are over, right? And the dollar Swiss has been trending super nicely since December 23, and we are at a sort of crossroads here. Now, it's a little bit unfortunate that we don't have US CPI this week. It's the following week, because that would really confirm things. Or the weak dollar. Like if we got weak US CPI numbers, then you know what? As I said, the market's pretty fickle at the moment with regards central bank sentiment or guessing it. It would flip very quickly to being, going from say 1, maybe 2 to like 3 rate hikes or rate cuts straight away. So for my benefit, I will always look at the daily charts and say, okay, what's going on here? Now, on the short-term charts, yeah, the dollar index is sort of breaking down a bit, but we do have a trend line a little bit lower. Dollar Swiss is at a key level. Dollar yen is getting there as well. Dollar CAD is sort of sitting mid-range, as is euro for this moment. But if the dollar falls, we've got some good entry levels here on the top side. Same with sterling, Aussie, and Kiwi, right? Everything's in anticipation, but right now, these things aren't breaking levels and they aren't close yet. That doesn't mean we can't see a move ahead of the CPI, which is, as I said, just over like a week and a half away. But the market will have a look at the sentiment. They'll have a look at the data this week and try and assess whether they get into a weak dollar trade or not yet. But we really need to see the US CPI numbers. So we've got, basically what I'm saying is we've got potential here. Okay. Now, if dollar yen is sort of just racing to the top side, that can always sort of like mess up the dollar direction, like short-term direction. You might see the dollar sort of starting to go up, but it's actually just dollar yen sort of retracing some of these crazy moves. And to me, there's a lot of potential here with sterling. You've got euro, sterling. Then you got the Aussie and the Kiwi, right? On a short-term basis, these things are ready to fly to the top side. But on a long-term perspective, they have not broken yet. And that will come with the US CPI numbers or some other event out of one of these currencies. So when I look at this week, I'm like, yeah, this could be a little bit annoying, but we might start to see the dollar sort of squeeze to the downside. Like if you're sitting with dollar longs after the non-farm payrolls, you might be thinking, well, we got like a week and a half till we get the big numbers. So maybe I could hang on, or we start to see these things drift. But outside the dollar Swiss, I'd be watching the dollar Swiss very closely, because on the short-term hourly charts, it's breaking down or close to it. And that is also the same on the daily chart. So dollar Swiss to me could be the key, not only just trading it. And if you're not a big fan of it, I haven't been in the past, but it has given up some good trades. If this thing starts to sort of drift lower through the levels, that to me will be a signal that the dollar is starting to ready to drift to the downside. And at that stage, you'd expect euro to sort of go higher, sterling higher, Aussie and Kiwi. Right. And this is where you tie in the data. At this point, you bring the calendar and go, okay, so what could help these things along the way? What could help like a strong euro move? Okay. Well, we've got the final PMI numbers out of Germany. As I said, you've got the RBA interest rate decision. Now, this is like one of those, it's not convoluted, but if there's no change of rates expected, these events can be awkward at best, right? You get this statement, they come out and they can sort of tweak things in their sort of press conference. It can be a little bit convoluted, but the Aussie is in a bit of a situation where the central bank is like, okay, we're on hold for the time being. Inflation's still high, but then we had some really crap retail sales figures. So is that the start of the economy turning or not? That's what the central bank's got to weigh up. But we can actually sit back and hear what they've got to say. Unemployment figures out of Switzerland, usually pretty consistent. The week really belongs to sterling, right? If I had to choose one instrument, sterling and sterling crosses, you've got a bunch of numbers here, Halifax price numbers, S&P Global Construction numbers. You've got the GDP numbers. You've got the Bank of England. So sterling should be on your radar, okay? If it's not one of your trading instruments, well, there's no need to sort of chase it, but you can still watch sterling, see what happens here, because that will be reflected in the other pairs there, euro, Aussie and Kiwi. Depending if it's strong or weak data, you can actually, that's where you can get the move from, right? So you don't necessarily need to trade these instruments where the data is coming out, but you can trade the ones that correlate with them if the correlations are in place. So RBA Tuesday, very easy to sort of focus. You come through like Wednesday, okay, there's nothing really coming out, okay? There's the oil stock change. You know, if you're trading oil is falling down to key levels at the moment. The CAD Ivy PMIs, there's a few little events here and there to get us salivating. One thing to notice is, right, we've just had the US non-farm payrolls. We had the Fed. Now we're starting to see a couple of the stooges here. The Fed officials come out. They've got various speeches on. what usually happens if they want the market to feel a change of sentiment, they will get their members to come out and throw in a few barbs like, you know what, we're getting closer to cutting rates, just to try and shift the sentiment in the market and don't leave it just for the economic numbers, right? And what that does is it smooths the overall moves. So I would be sort of watching here well, looking for comments if you are in that North American session. If you start to see Williams or Barkin, or they're starting to talk rate cuts and potential for rate cuts, that's the signal. Usually they all say the same thing. That could be the signal for where dollar Swiss starts to move lower, or the dollar in general, and we might start to see just a nice technical trade during this week. There's going to be more technical stuff than usual outside of the central bank. So you come into Thursday, once again, like Thursday is like the prime day of the week. If I had to choose one day out of all of them, because you've got formations of structure, price movement, bit of momentum across all instruments by Wednesday, and then you get into Thursday, and it's really, you've got everything you need there, and quite often we get some important releases that can actually go with that momentum or not. Okay, the Bank of England, once again, not really looking to change rates just yet. And so is this a trading event off the cuff? Not really. You've got to like look at what they say in the statement, the press conference, and then try and look at their minutes as well, and get a feel for what's going on, right? So sterling, there may be opportunities throughout Thursday. I would generally say like the GDP numbers, etc., on Friday will be an easier trade, because we'll have exactly what they've told us, and then with numbers, the market can't get confused. The problem with central bank statements and press conferences is you've got all the traders there, right? And they're interpreting the statement and the press conference potentially in different ways. Whereas with a number, it's either stronger, weaker, or as expected, right? So that's why the numbers are easier to trade, because they give us the answer straight away. Whereas sometimes with a statement, you're waiting for the press conference to see if they contradict themselves, or if they explain things in a different way to what the market has done or interpreted what they've said. So this week, I think it's you're going to start to see a few little shifts in momentum. The sort of unemployment figures on Friday in dollar CAD, well, they would be a bit of a head kicker. Manufacturing production numbers actually in the UK, always a sort of solid number. So so we can see what the dollar's doing, right? And there's a lot of potential here on the hourlies for, as I said, a continued move to the downside. But dollar yen at the start of the week, you've just got to almost sit back and watch what happens here, because you can see here it's going up the start, and it's taking the dollar with it on a few pairs, right? And this is just, as I said, a rebalancing of positions on dollar yen. And you can't do anything about changing that, right? So one thing I would look around is the global markets. Try and get a feel for what's happening. So if you're just trading currencies, that's great. But if you understand the relationship between, okay, the various financial markets, well, then you're going to be in a good position to attack any of them, really, right? So if I'm looking at the North American equity futures at the moment, they're going up. Am I seeing a bit of a risk profile, risk on or risk off in the currencies? Not at the moment, right? The currencies have just sort of started, right? So you're not going to see any formations, probably not within the next, 5 or 6 hours at least. So what we're seeing is a bit of a market connection. The yen's going down against most things. Okay, as I said, there's a bit of someone's in there testing the market, just buying some dollars. And don't forget, there'll be huge option structures around at the moment that would be, these are the guys that are trading dollar yen, no one else, really. Everyone sort of asked me, like, are we in, are we out? I'm like, you know what? In the banks, when this sort of stuff used to happen, you'd have to wait for it to settle down, wait for some uniformity, then you can start trading the yen and the yen crosses. But a little bit slippery at the moment. So, but what I was saying is, if you understand how these various markets work, right? So if the bond yields, US bond yields are going up, okay, stronger dollar, usually the equity markets are going down, Euro, Sterling, Aussie, Kiwi down, and the dollar pairs are up, right? If you understand that, then it's worthwhile understanding what's the overall trend happening here with the, say in particular, the equity markets. So if I bring you back across just to my sort of like global markets page, I like to have a good look through. And just by doing this, you can actually usually stumble across some good opportunities, right? So there's a bit of doubling up here with some instruments. You can see here on that hourly chart, that short-term support line. I mean, it's got a couple of touches there. And this is when you can start really assessing things, right? And what I'm sort of talking about, let's get the pen, is looking at like this trend line, right? It's chopped through, it's come back to it. But you know what? In the scheme of things, on an hourly basis, it's probably looking more like that at the moment. What I'm trying to do is just focus on the key levels. So dollar drifting lower, euro going up. You've got gold here. If I can just get my pen. Okay, gold sliding to the down. It had a bit of a clean out, sort of finding a bit of a home there at 2,300, but looks like ready to go lower. Oil is one definitely at 78, the figure. This trend line is coming back to places like going back to December 23 as well. Oil's been elevated artificially, obviously, for some time. So it's good to see that sort of sliding back. And then on the US equities, okay, the Dow Jones, the S&P, well, the S&P looks like it's ready to go. The Dow has, or the minis have already sort of left the building. Whereas the NASDAQ still got a bit of a way to break through 18,300, and even the cryptos, right? Bit of a safe haven when everything's going a bit kooky, up above 64,000. So to me, equity markets going up and looking like that's going to be sustained. So, and this all goes back to a weaker dollar, and the non-farm payrolls give us a weak sentiment. It's like a light grey rain cloud over the market at the moment. It's not heavy, not a big black cloud where it's going to bucket down. It's just sort of light clouds. Okay, the unemployment figures have given us a tone. Is that something we can use this week is the key question, right? Can we use that weak dollar tone? Well, you can, okay? Ideally, well, there's no US numbers, so the opportunities, as I was saying at the start, are really going to come from the individual currencies. And it's about time some of these other countries or instruments actually stood up and were counted, right? Central banks meetings, obviously the key, but there will be other opportunities, right? Like the Cat Ivy PMI is a solid number that impacts the market if there is sort of any sort of level of variance. So during the trading days, depending on where you are, you can have a look and take advantage here. And that's primarily because we do have a general weak dollar sentiment in the market. It has stalled, but it will continue if we start to see, say, stronger Aussie sentiment, stronger CAD sentiment, stronger Euro sentiment, stronger Sterling sentiment. Now, once again, coming back to Sterling, there's a bunch of things coming out in the UK. So it's more likely that the UK will be have more potential than the other instruments. So I would be looking at Sterling, and then I'd go into my Sterling template and start to look through the Sterling crosses, right? Do some homework. Try and find out if there's anything happening particularly in Sterling on some of these Sterling crosses that stand out like a sore thumb, okay? And this is, you can either do that by looking at your charts, looking across the board here, across the Sterling crosses. Okay, go through, just do your technical analysis the same way, the same methodology that you would otherwise, and see if you can find some good trades in there, okay? And then start to use some of the tools you've got, which is using Metastock, okay? Coming up here, maybe looking at the relative strength of Sterling against a range of instruments, right? So if we do have Aussie data one day, which comes out sort of firmer, we can see potentially what the impact will be by looking at the relative strength on the hourlies or dailies, okay? Like Sterling CAD, okay, it's up 0.7%. Obviously, Sterling Yen, like loads lower, right? Is there potential? Would I buy Sterling Yen if I got stronger Sterling? Maybe, right? I like to sort of stay away from trouble, but it could be an option because it's so overdone. This might be the catalyst for sterling yen to go, up significantly if we saw something really strong. Looking at things like, okay, sterling Aussie, okay, it's down 0.83. That would sort of potentially go further than just another instrument that hasn't actually moved as far, right? So what you can obviously sometimes you can get instruments moving, like adjusting significantly over the course of the week, and the market doesn't realize it. And then they come back and go, oh, hang on a second, this is really out of whack. And what happens is you see a correction in those instruments, right? So just by doing, as I said, usually on a Monday, if I wasn't talking to you guys, I'd have the music sort of blaring, nothing too heavy. But and what I would be doing is just drawing trend lines and trying to work out where the support and resistance is short term for these instruments. Okay. And some of these ones you can see I haven't actually adjusted the trend lines for ages, but it just makes it easier if you just go through and you're like, and if I was looking at this, where's my little pen? Okay. And I'm like this is where you sort of, you come back to it and you go, damn, I didn't even look at the sterling Aussie, right? And you can see how aggressive this thing has snapped through that trend line. And it's just like, it's done a massive move. There's cash in it, and then it stops. So by looking at your crosses and isolating various opportunities, you can walk into trading opportunities like this and just go, you know what, this is a good trading opportunity, or a potential one, or you see how it's performed in the past, and then you can come back and go, you know what, I want to be ready for this next move, right? So that's what I would be doing on the crosses and just preparing, because we do have sterling and Aussie data this week. Obviously Tuesday, the RBA, Bank of England Thursday, loads of UK data on Friday, and a whole bunch of things. So anyway, this is what I would be doing, is putting down on my blotter, okay, what's the long-term trend on these instruments? What's the short-term trend? I like to match it up. So I've got long-term and short-term working together. If the long-term trend lines are breaking, well, I'm definitely on edge and actually looking for opportunities. That's what I've got here with dollar Swiss, right? So that's why I'm sort of encouraging you to say, look, keep an eye on dollar Swiss, because this could be the one that tells us what's going on, even if you don't trade it. And that's pretty much the week ahead, right? You don't have to sort of like dig too deep to find out what's going on. Like, first of all, if I looked at the US, like the US, we know we've got the sort of US bias in there, like a bit of a weak dollar at the moment. So first thing I look through is, okay, what US numbers are coming out this week? Is there anything that's really substantial that could give us something good? And it's not. Okay, it's central bankers talking. It's tier 2 or tier 3 numbers. Nothing really coming out. So the bias isn't on the dollar, right? So you're going to do a bit more homework here on the other instruments to sort of keep up the speed with what's going on there. And that's pretty much the focus of the week. Okay, sterling, definitely a focus. Keep an eye on dollar Swiss technically. Obviously, the RBA come into play. We are definitely covering the RBA. If I just come back to that. For those traders in the live trading and coaching, you'll get access to that. If I can just get that page up. And, funnily enough, this is where you're going to find some good trading opportunities. Weeks like this, where there's no standout US numbers, to me, they are go-to weeks, right? The market sort of switches off. There's less volatility in the market, and you can, and really sometimes you can get some great trading opportunities. So the next port of call for us will be the Aussie RBA interest rate decision tomorrow. I'm going to sort of run a session on that just to sort of see what's going on, see if they come out with anything specific. I'm not anticipating anything, but I will react if we do see something significant in that meeting. All right, and that's pretty much the focus for this week. As it is, like next week, we'll be frothing. We've got the US CPI numbers. We're just going to get through this week, try and add some cash to the tin, right? When there's big trades coming up, and it's usually around the break of big trend lines. That's where you're going to see a bigger move, right? This week, are we going to see that? Well, we don't have the dollar catalyst, but we may see it from somewhere else. So let's just keep our eyes and ears open and see what we can make of it as we go through the week. All right. Any questions there, Shelley, Manish? No. All right, guys. Well, I'll get this up on the
Hi.
airwaves. Yeah.
Yeah. I did have one question. Can you share this layout for the global financial page, the updated one which you have created? I was trying to create the same thing, but it's quite tricky.
Yeah, right. Okay. So you just want the okay, I should be able to find it. I'll send it to you in the Discord there.
Yeah, that would be great. That would be great.
All
Yeah.
right, no dramas. All right, guys.
All
So
right.
as of Monday, like Monday, as I said, do your analysis and actually just sort of see what's happening across the board, okay, throughout the sort of day. See what the currencies are doing, see what the equities are doing, see if anything stands out, like dollar yen at the moment. And that's the way you can sort of start to, because what we need to do is reconnect after the weekend, start to feel the groove of what the various instruments are doing, and then we can start to include the economic numbers. All right, guys, have a good one. All the best this week, and we'll tune you up tomorrow with the today's trading action. All right, guys, have a good one. All the best. Cheerio.